Now, you've put out a McKinsey report, one of those detailed reports that you do, on the opportunities to be had in supporting small, medium and micro enterprises. Just give us the context for this, the research that you did and who you talked to and broadly what you were trying to do.
Absolutely, thank you. So what we found is our banking clients across the world are looking for new ways to achieve top-line growth. And we actually, through the research, found that the small and medium enterprise opportunity is one of the larger opportunities that banks can capture. As you rightly said, over $220 billion in additional revenue that banks can capture through this opportunity.
Well, that's your estimate.
That's our estimate, yeah. Absolutely. This is across all the emerging markets, whether it's Asia, South America, Africa, and so forth. And so we know, why have banks kind of struggled to capture this opportunity so far? Well, they've really found SMEs to be hard to assess the risk for, and they've also found that the costs of serving this SME has been prohibitive traditionally. But in our research, we interviewed 30 banks who were actually starting to innovate and find ways to serve this market, which was very interesting to us. And many of them were actually making significant profits. So 2/3 of that sample were making 20% or more in terms of return on equity, which was astounding to us, which is a really remarkable finding.
Now, historically, banks you would expect to be cautious about small enterprises. Almost by definition, the micro ones have no record and they're very difficult to, a lot of them, they're reporting systems and banks don't like things to be vague. But clearly what you're saying is if they can be innovative, they can do this. Not only is there an opportunity, but as you say, it can be profitable. What is going to take, what will it take to push the banks into, those that aren't, into investigating the sector more?
Well, I think there's a few things. So some of the innovations we saw in how banks are attacking this. Firstly, there's a lot of innovation around risk assessment. You rightly point out that it's very difficult for banks to assess the risk of micro and small enterprises. So they don't have financial statements often, they often aren't covered by credit bureaus. So what some of the most innovative banks are doing is actually things like psychometric testing. Right? So you bring in the small business owner into the bank and they take a 30-minute assessment right there in the branch, and which tests things like business acumen, financial literacy, and so forth. And that score becomes an input into the lending. And so you don't need complicated financial statements. You don't need a credit bureau score, but you can actually get very good information about lending to that SME.
I heard one survey in South Africa say that if you want micro enterprises to thrive, make sure that they're run by women. Which, there are all sorts of things that indicators of success. The third category that you've said where you've actually got something to offer is you increase the return on equity. Now that gets their attention, and you've got 5 practices where you say, if you do this, you will enhance your ability. The first one is just understanding the market.
Absolutely, that's critical. And there's a big difference between banks that understand their SMEs clients well, whether that's what sector they're operating in, where they're operating in. One very successful bank in Indonesia, for example, targets retail clients within a 1 or 2 kilometer radius of big retail markets in Indonesia. And the retail segment is huge across emerging markets. Having identified that segment of small business clients, they then have a low-cost way of reaching those clients. They actually send agents, which are bankers who walk around the area to bank those clients at a lower cost than would be through the branch channel. So that is one of the big areas where we see banks differentiating themselves in terms of really understanding the sector and offering a proposition that's relevant to that sector. The second one is thinking about costs. Right? So many leading banks, the ones that are the more profitable in our sample, are, for example, reducing the length of application forms, simplifying processes in the back office. And this means that the cost to service those SME clients comes down significantly. Another example is a bank in Brazil that is using contact centers actually as a way of a cheaper means to service the SME.
Of course, it would be nice if the banks did that for everyone and not just for the small and medium enterprises. But there's also an interesting section there where you talk about empowering the clients through literacy. Instead of the bank saying, you come to us and prove that you can do it. Training, financial literacy?
Absolutely, because a lot of these clients are not as sophisticated as, for example, large corporate clients. So the banks actually have a role, and some of the leading banks in the world actually do things like holding seminars for their SME clients to tell them the basics of how to prepare a basic business plan or a basic set of financial statements, which actually both helps the bank get more information about the client, but also helps the client think through how they're going to make their business successful. And a successful business means the bank is more likely to get its loans repaid, and that's better for both parties.
Managing the risk too. I mean, the unsecured lenders in South Africa, Capitec and African Bank in particular, the people say, how can they lend so much money without security? But they have shorter loan terms. They've come up with different ways of managing the risk. So clearly that's important.
Absolutely. And what we actually found, we were astounded by how low the risk losses sometimes are in this segment. So the leading banks have got losses as low as 2 to 3%, which is remarkable for this segment. And actually we found that the SME clients actually are quite keen to repay the banks because they want ongoing credit. This credit is actually vital to their businesses in terms of buying stock, buying working capital, for example, and they want to be able to do that time and time again, and so they do not want to default.
You mentioned getting help from government. That's the fifth factor, where you work with government. Now, how would that work? What's in your mind when you say work with government?
Several amazing examples. So one is in Nigeria, where the central bank, they actually worked with the 24 banks there to create a $500 million fund to encourage, to share the risk of and encourage lending to the agriculture sector in Nigeria. And that initiative is going well and actually leading to increased lending to small businesses in the agriculture sector already. Another one is in China, where the government, one of the banks in China is collaborating with the government there in terms of establishing where exactly in the country, in which municipalities are these small businesses.
You mentioned 30 banks, and you've obviously got some success stories.
Yes.
What countries have been most successful? In other words, where most banks or more banks than elsewhere have done this?
So two regions actually. I think Southeast Asia, phenomenal amounts of innovation happening there. So countries like Indonesia, Thailand, also India in some cases, a lot of innovation there. Africa, amazingly, is actually where a lot of innovation is happening as well. So the use of direct agents to lower cost, the use of psychometric testing in some of the credit assessment, and the focus on particular sectors. We're seeing leading banks, even in this continent, taking these approaches, and it's actually, frankly, a very exciting time for creating access to lending to SMEs.
What would also be good is if the banks can help governments that have lots of red tape. I mean, one of the issues with these small enterprises is how difficult it is to start a business, the number of hurdles that you have to go through.
Absolutely.
And in some countries it's 20, 30 pieces of paper and different offices that you have to go to. Surely the banks with their sophisticated systems and individuals can help business by putting pressure on government to make things simple.
Absolutely, because you find in a lot of these emerging markets, banks have a lot of influence with government and they're talking to the regulators very frequently. In Brazil, we saw an example where actually the government there has simplified the tax code significantly for SMEs. And this actually brings forward a wider topic of what can governments do to help SMEs. In many of these emerging markets, SMEs are 60% of employment. So there's actually a huge incentive for governments to create jobs through the sector. And they can help banks by doing things such as setting up credit bureaus, simplifying the tax code, simplifying the red tape, to actually make it easier for people to set up businesses in the first place and to grow them as they move along.
Well, let's hope the banks that aren't doing this are listening and can benefit from this research. That was Mutsa Chironga, Associate Principal at McKinsey Company.